Hi, fellow traders. This is Larry Williams, and I'm excited about my presentation today. The end is near, and by that, what I mean is the end of this year is close. And this will probably be the last report I'll be doing on StockCharts.com. So there's a lot of information for you that I hope will get you until the end of this year. So grab your pens and pencils, and let's go. Let's see what we can figure out today. The end is near. I love this. So like in a good way or a bad way? Well, probably in a good way. You're going to see why I think that in just a moment. Today, what I'd like to do is focus on my forecast for the stock market. I'll talk about gold and bonds into the end of the year, into next year. And for you stock traders and investors, I have some forecasts for Apple, Amazon, Microsoft, and Tesla. I think those are really important stocks right now, and you'll see where I think they're going to go. I'd also like to explain why I don't think we're in a recession. This has been a real hot topic this year. Are we in a recession? Are we not in a recession? I don't think we are, not yet at least. I'm going to show you exactly why I think that. The last report I did was from down to up, and away. We've done a report from September, said expect the market to go down into October, and then we did this report up, and away, and it's pretty much what the stock market's done. It's had an explosive move here to the upside. But before we get into that, in talking with traders, I see so many traders losing money because of what I'm going to call the wealth killer. I'd like to explain that to you today so you don't fall for this trap. We're going to get into all my forecasts and all that stuff in a moment, but sometimes just sage advice is more important than looking at a chart. So what's the wealth killer in the marketplace? I think it's exactly this whole get-rich-quick thing that's all over the internet. Here's one I saw, 100% guaranteed to earn daily, 100% a day. Wow, that's phenomenal. I just wish if a guy could earn that much money, maybe he'd buy a different sport jacket and tie. But this is the type of thing that I call the wealth killer. Well, here's another one, get rich trading altcoins. Well, of course, we know how well that stuff went, right? Oh, and tattoos, probably a great sign of investment success on Wall Street. Or scalping, 8 hours, 179% profit. Look at that, thumbs up. You can make 179% in 8 hours. Well, then what would your annualized rate of return be? It would be staggering. You want to get it the easy way? This is it, the wealth killer. That's what this is. To fall for this stuff, we got all entrapped. And I fall for this too. Even now, my age, like, oh yeah, here's a great, make a lot of money quickly and everything. No, Larry, I've been around the block. You guys and gals have been around the block. Not the way it is. After I did it, and you make an annual contribution of $1, which is nothing, right? But you earn 1,000% a year, which is not much because one of these guys is earning 179% in 8 hours. You end up with some number that's so big as 38, quadruple trillion. You probably own all the world after just 10 years. So the point is, it's very unrealistic. You have to be realistic. And so what rate of return can you expect? Well, look at the great traders, the fund managers. How the very best of the best do? 30, 40% a year, sometimes 60. That is knocking it out of the park in this business. So that's a realistic expectation you have so you don't get busted by the wealth killing effect. And when you start to go for those gains that you read about and people on the internet claim that they're getting, the problem is you usually get in over your head and you're over margin. Okay, let's get to some boring stuff about the market right now. Gross domestic product, GDP. Can things get better here or not? Good question. Mixed bag this year. There's been some good things, some bad things. But certainly one of the driving forces of the economy and way of measuring it is gross domestic product. So can it get better or are we just falling all apart here? Here's my answer. And to get that, I'm going to look at money supply. The green line that you're seeing is money supply. And the black line is gross domestic product. Notice how closely they follow. Money supply goes up, GDP goes up. Money supply comes down, GDP comes down. Money supply goes up, GDP goes up, right? Money supply comes down, GDP goes down. Really tight correlation here between money supply and gross domestic product. Now that's where it gets really interesting because if we look a little closer at that, what I've actually done on this chart, pretty interesting. I have moved gross money supply forward in time about 3 years. In other words, this green line that you saw that did a good job of forecasting gross domestic product was known in advance. So that forecast continued the same relation. Notice again how money supply comes down, GDP goes up, comes down, GDP goes up, comes down, so does GDP, goes up, so does GDP. Well, the forecast, in other words, what we can do here is forecast gross domestic product with money supply. And the forecast says, generally in this time period, at the end of 2022, we should start to see GDP go back up. Wow, that would be a real relief. Now, GDP is not a great forecaster of stock prices. I've commented that before on these presentations for StockCharts.com, but it's not bad, and it shows the internal strength. Clearly, when GDP is positive, stocks do better. So it looks like, in terms of gross domestic product, we have some good times coming in the market. Nice, huh? Okay, let's look at some individual stocks. How will individual stocks trade? What my forecast is for those? I'm looking now at Amazon, and we're doing this on a weekly basis. I'll give you a little perspective of the market here. This looks like what's going to happen to Amazon. And a little bias, got to admit, my wife is long Amazon and also Microsoft, you'll see being that stock as well. I'm not in those positions, but just for full disclosure, she is. And you can probably see why. We have pretty good cyclical activity in this market, in this stock. We're in the area of a cycle low. We should rally until about the end of the year, come back, and it looks like another buying opportunity come March of this coming year. So for now, I believe, and remember, we're working on a weekly basis here, until the end of the year, I think the bullish bias to Amazon is on the upside. Now, there's another really sweet spot coming up in here for those of you like Amazon. The purple line is my very long-term forecast for Amazon. And starting around the 1st of March, since this stock is traded, we've had an up move from about the end of February, 1st of March, into May, all of the time, 100% of the time since the stock is traded. Now, this is kind of a combination of cycles and seasons, not just the seasonal pattern. It's a combination of cycles and seasonal, a couple of different indicators here. And by doing that, we can ferret out pretty much the path. You can see Amazon pretty much followed the path of this indicator. And it's starting to rally here. We expect it's going to rally. This was done a few days ago, and we've already rallied up, actually. But we go up until the end of the year, we'll pull back, we may go down or sideways. But the really big opportunity coming up here, about the middle of February, you want to really pay attention to this stock. If you get buy signals at that time, oh my gosh, you want to take them. Bitcoin, oh, that's a big popular thing these days, right? And one of my very favorite books is Zurich Axioms by Max Gunther. If you haven't read it, go out and get it. You can get it at Amazon. I actually tried to buy the publishing rights for the book. I think it's such an important book years ago, and I wasn't able to. And one of the Zurich axioms is don't invest in fads. And, the people that thought this was the wave of the future, but it was just a fad, that all these people bought all up in here are now holding Bitcoin, regardless of which coin it is. And every time this pops its head up, they're going to sell it. Good example. Now, I will add, don't invest in fads. Yes, you can trade in fads, but long-term investing in fads, no. This is the pattern that you've heard me refer to as a fallen angel pattern, where stocks run up, crash, they can't come back. They take forever to come back, forever. So I think it's all over in this game. And again, drives home that Zurich axioms, not investing in fads. Okay, let's talk a little bit about crude oil and what I think is going to happen to crude oil. This is an interesting forecast. Notice this was from my 2022 forecast report. This was done over a year ago. It said we should have a bottom in March, and we'd have a sell-off starting around the 1st of June, and then a bottom just before the end of September. Crude oil should start to rally. So a couple of reasons for showing this today. One, to show that in fact we can get a pretty good idea of a general path that these markets can take. The problem in working with traders, I find, is they really don't have a sense of where this market's going. Oh, they heard a rumor about a story, but you don't have any internal confidence in that. So you take a buy signal or sell signal. Clearly, if this path can work, a sell signal is going to work better here than a sell signal down here, right? The question is, can we really see that much of the future? Yeah, yes and no. The future is really hard to see, but we can get a glimpse of it. Now, here it is in StockCharts.com. This is that March low point. Remember, that's right here, when we should expect a rally. And there was a rally. The first part of June, right here, that's right over here, we should expect a decline. Oh, we got it. Until when? About the end of September. Oops, there's the end of September, and at that point we start to rally. So a couple points here. The forecast made a year ago suggests we should rally into December and then start to pull back a little bit. Well, we started to rally in here. I think crude oil can probably rally a little bit more, and then we'll start to see, oops, go the other direction. Sorry about that. This move, the next start of a cyclical wave. Now, I haven't updated this since December 2021 when it was forecast, so we may have changed it a little bit, but you get the idea. We can get a pretty good understanding when we should have significant buy and sell points in these markets just using cycles. I'm going to talk a little bit more about cycles in a moment as well. They're really fascinating to me. I think that things happen irrespective of cycles. The cycles are really the controlling thing. The news comes out and then the cycles kick in. So if you need a glimpse of the future, I can't think of anything that's any better than looking at the cycles. By the way, your support makes all this possible. All these presentations I've done this year, I think I've done 14 or 15 of them. I don't get paid for doing these. I don't get paid from you or from StockCharts or anybody. StockCharts does all the publishing and promoting of this. They make it possible. So I think it would be nice if you maybe tried their services. You can discover all their uses of their StockCharts platform. And have a free one trial. So if you haven't done it, if you're not a StockCharts user, if you want to continue to see shows like this on YouTube or wherever you're watching it, yeah, subscribe. Okay, I think there's troubles ahead for Tesla. Here's my cycle forecast. You can see Tesla's been pretty cyclical. We currently should see the market start to go down to the downside in terms of the intermediate term, shorter term cycles. I'm sorry, these are the short term cycles. And about the 1st of December, we start to go down to the downside. But here's what's more important. The longer term, this is a long-term cycle of Tesla, now starts to go down from around the 1st of December into next year. In fact, since Tesla has begun trading, we've gone down 95% of the time. This is one of the strongest down periods or waves that we've seen in this price, in the stock. So starting around the 1st of December, if the bias is to the downside, well, with our cycles, we can say, oh yeah, peak, rally, and another selling opportunity in the midst of the down cycle. See how we can use that? So, okay, we expect the longer term trend of the market down, the shorter term trend come down, bounce up a little bit, but then in this area again, a really nice with the trend. That's important to be with the trend entry point in Tesla. So you want to look for sell signals around the end of the year in Tesla as we start to catch up with this longer term down pattern. Again, face some question. This is not the seasonal pattern. This is based on seasonals and cycles in the market. And that's how I arrive at it. So there's a view of what I think is in store for Tesla. You know, FANG has been the big thing. You know what FANG is, right? Facebook, Amazon, Netflix, and Google, or Apple and Google, depending which A you want to use there. And it got beat to heck this year. Got hit with an ugly stick. But there is a sweet spot coming, I think, in FANG, and I'd like to focus on that for you a little bit. And that's going to come about the end of this year is when we should start to see it. And you can see the cycle forecast. We can rally a little bit here into December, then dip, then a nice sweet spot comes into FANG. So if you're following those stocks, this is the ETF, by the way, for those stocks. If you're following those stocks, this is the pattern that I'm expecting them to take So you're kind of forewarned here with an idea of what you can expect to take place. Okay, we talked about Microsoft briefly. I think Microsoft is going to start a nice up move here. You see that we have the shorter term pattern that's in red, says it's rally time. The longer term says from about October all the way into the first part of the year. This stock should move to the upside. Again, general pattern that Microsoft follows. So those of you who like this stock or you're looking for stock to buy for the year-end rally, may or may not happen, but I certainly the bias here in Microsoft is to the upside. That's a stock I think you can really pay some attention to. And Apple, oh my gosh, this is one of the most favorite stocks of all time. Some people call it the best stock of all time. I don't know, but I can tell you pretty much what's going to happen to Apple right here, right now. I think we're going to see Apple start to rally until the 1st of December, have a pullback, and then after the 1st of the year, another up move. So in terms of what can happen, well, we can probably challenge these old highs in this rally into December, shortly before Christmas. Then we can start to see this market start to come down a little bit. And again, you know, what I'm trying to do here, I certainly don't have a perfect crystal ball of the future. These are roadmaps that give us direction and potential turning points of when to look for buy, sells, and signals, when our sell signal will work better here than say down here. That's the purpose of this. I'm still learning about cycles. I'm still learning about trading after 60 years of doing this. And that's the joy of it, I guess. And, you know, not all of my forecasts are going to be right, but we work at it. And as you've seen, if you go back and review the forecasts I've done this year, I think you'll see most of the time we have a pretty good idea of the future, which, you know, it's kind of like in the land of the blind. The one-eyed man is king. So what you know now is something very few traders know, like, oh, here's a suggested roadmap of how to follow this stock in the future. That's the purpose of doing this. That's why I like doing it. I have obviously a real love affair with the markets and being able to show you people and help a little bit, like, oh yeah, here's something we can actually work on, not just a bunch of words. Okay, let's talk about the stock market. This is my long-term stock market forecast done in 2022. This was shown in my chart 14 of my annual forecast done last year. And pretty good. It said we should drop, have a rally middle of the year, come down to the end of the year and start to rally. And it suggests the rally. Now, this data starts to wobble quite a bit, but it looks like the next really long-term buy still comes, I know, a long ways away, 2026. But between now and into 2024, it looks like we rally, come back. Well, anyway, you get the idea, right? That the bias now, the cyclical bias, that long-term cyclical bias, is to the upside in this market. That's what we want to be looking for. And I think that gives a pretty good idea of where we're going to go in the market. Big question, are we in a recession? There are so many indicators to measure a recession. You can look at GDP, you can look at the yield curve. I look at that a lot, the spreads, unemployment rates. You can look at a couple of really interesting indicators. One is a debt on charge cards, how many people are paying off their debt on time. But the bottom line of all these recession indicators, the one that I think I found to be the most successful actually comes from unemployment, the continued claims. I explain this chart to you. These gray lines you see here are all times we've had recession. And notice that in the 2008 recession, the line picked up. The 2000 recession, unemployment claims picked up. They picked up in 1990. They had been high, picked up again in 1980. They picked up again in 1975, and 1970 picked up. Clearly, there is no one perfect be-all, end-all recession indicator. Some work sometimes, but the one that I think has been consistently the most successful has in fact been unemployment. So if we look at unemployment as the best indicator, we need to blow this up a little bit so we can see the current trend, what's been happening here, and here it is. Obviously, during the pandemic, unemployment went way up. but it's come down. Look where we are now. We have not done this. We haven't turned up in the indicator. So you tell me, are we in a recession? Or are we not in a recession? It looks to me like we're not in a recession, based on what we see here. We haven't seen any kick up here. And if we do, we start to see this get substantially an increase. Yeah, we're probably then entering a recession. Oh, words to live by for you. Prayers work best when your trades are with the trend. That's the trader's prayer right there. Really great bit of wisdom for you to continue to think about when you're putting on those trades. Tough time. Wow, look at this. Robert Kozlowski, every 90% of the crash will be done. Like 10% of the people will survive. What? Only 10% of the people are going to survive? Or how about Jimmy Rogers? We're in serious trouble. Worst recession in the century. Scary stuff. The collapse has begun. Everyone's wiped out next month. So this was 2 months ago, by the way. I don't know. Are you wiped out? Probably not. But wow, we're really in tough times, aren't we? 11 days ago, we only had 14 days left, where the U.S. had 25 days to find the solution. That's it. 25 days left. There's only 14 days left. We haven't found the solution yet. It's the end of the world. Oh, and Robert Kozlowski again, rich dad, poor dads, whatever it is, guy. The end of America and hard times ahead for the economy. That was October 3rd. Remember October 3rd? Go look at your charts. Well, October 3rd was probably the very best time you could have bought stocks. So rich dad, poor dad, things like rich marketer, poor subscribers, maybe. Even the weather, hurricane warning, Florida, devastating. Well, it was a bad hurricane, but it didn't devastate Florida. Florida survived. My point is, be cautious of all these gloom and doom guys, because look at this. Here's 73 years of perspective. This is a yearly chart of the Dow Jones Industrial Average going back to 1950. If you do a quick count, you're going to see that only 3 times was the next year lower. Like down year, down year, down year, down year, up 1 year lower, down year lower, down year, down year, down year, up lower, down year. Nope, 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 nope. The odds are pretty high, just based on this, that next year will in fact be higher, and all the gloom and doom, the end of the world will have 14 days left. You know, everyone's going to be wiped out. Oh my gosh. I was at a conference with Jimmy Rogers 50 years ago, something, 40 years ago. He was bearish then. He's bearish now. He was bearish because college graduates are getting too high of a salary, he thought. But if you want to make a lot of money in this business, be bearish. When you're bearish, you got a lot more followers. People love bad news, but just here's hard reality for you to really work with. What does hard reality say? It's not often we get substantial years down in a row. So be careful who you believe. Be careful what you read. Oh, Elizabeth Holmes, remember her? Or, oh, there's the guy who just lost all $1 billion in one day. Actually, it looks like he was scamming people, doesn't it now? The truth comes out. So you have to be really careful what you believe and what you read in this business. 60 years of reality. You might like this. I started trading in 1962. If I put $10,000 into the Dow Jones Industrial Average and held on to it from then until now without working, without ever having a single trade, just in a Dow Jones ETF, that would now be worth almost $4 million. Now, maybe there's a suggestion to you there. Long-term investing is probably the greatest money-making machine in the history of the world. If I did nothing, it'd be worth about $4 million if I just had the sense to buy and hold on. Probably a lesson there. Okay, let's look at inflation. This has certainly been the driving force this year of everything in the stock market. My inflation forecast says we should start to go down. And the good news is, if we look at the sticky price index, it finally tipped over a little bit. The better news is the New York Fed has something called their UIG, underlying inflation index, and it has definitely rolled over here, which I think means the Fed won't have to consistently increase those punitive interest rates that they've been doing, and that's positive for the stock market. If you can trade this is the ETF for inflation, RINF, and this is the cycles. Oh, look where we are now. and look where the longer term trend is. So if you want to take advantage of what I think is a down move in inflation, there it is. We had a sweet spot sell around the middle of this first of the year, for middle of January, and again around April, and we should see it work to the downside. So it's interesting. The cycles for the ETF match the cycles that we looked at for inflation itself. So there's another trading opportunity for you. And of course, if we talk about inflation, we have to talk about gold. Gold, people think is driven by inflation, maybe or maybe not. It looks like we may have a pretty good year coming up in gold, by the way, when I look at my longer term forecast. But for right here, right now, I think we're going to see gold continue moving higher until the end of the year. So there's a little insight for you on that. Okay, cycle charts. People always ask about these cycle charts. I create them using timingsolution.com. This is a work-intensive thing. It's not automatic. You have to do the cycle work yourself. But if you're really into cycles, well, timingsolution.com is the software that I use to do it. Coming in December, I will do my 2023 forecast on stock and future markets. If you're not on our email list, go to ireallytrade.com and we'll notify you when the forecast is ready. Okay, so go to ireallytrade.com, sign up there. We don't send out anything other than if we're going to do something. So we're not going to get spammed or scam or any of that type of stuff at all. But get ready because we will issue it in December this year. Okay, the cycle theory I said was going to get tested like never before because this is the forecast made last September that we should start to bottom about here, strong run up here, a little bit of a pullback, and another strong move into the first part of this year. So this continues to be what I think is going to happen in the stock market in terms of a longer term move in the market. This is where I think we are. So we're in this phase. We're in November. We're still a strong phase. We can have a little bit of a pullback in here, but the market doesn't slide off much in this cyclical seasonal time period. And then boom, starting around the 10th of December, it's up and away again. So I know a lot of people on YouTube would disagree with my bullishness here. That's what makes the markets. People are going to disagree with you. If you're bullish or bearish, always find somebody on the other side of the trade. That's what makes this so darn challenging and so exciting, really. This is a great intellectual game. What's going to win it? Well, I think this is the path that's going to win it. That's my view. There are a lot of other views, but this is how Larry Williams sees it. And so I'm really out on the end of a limb here with my bullishness. I mean, but that's me. I felt like this little guy. We talked about how crude oil can predict interest rates. Crude oil is a red line. Now rates have started to come down. We've seen a substantial rally in the bond market. Well, it figures because look what crude oil is suggesting. Crude oil is suggesting interest rates follow crude oil pretty well. That rates can finally start to decline. Again, this was done in October. We can predict stock prices of crude oil, and that crude oil prediction says this is what should happen. Notice crude oil, this was known in advance. So this point was known back here. So it looks like, yep, we rally until into the new year. And then maybe in February, we start to have a pullback in the market. So again, this is to give you some perspective in the marketplace and understanding of where we most likely are going. So again, keep this in mind. I'm giving you my opinion on what I think my best stocks are here. I've been wrong in the past. I'll be wrong in the future because nobody's perfect in this game. But I hope what you can do is learn not specifics as much as like this is how one trader thinks, how he looks at these things. And my successes and failures are really something to open doors for you, give you some ideas to think about and maybe help you in your own understanding or in your own working with the marketplace. That's really why I do these things. And again, I certainly, I've got a pretty good record, but 100% record, no, I don't. I wish I could. I'm working on it, but I don't think I ever will. We talked last time about the money flow divergence. This is StockCharts.com indicator. We'd made new lows and we didn't see divergence. We saw divergence in the market rallied. That's pretty classical. But the point of showing is, yeah, we can see the future. You can actually get a pretty good idea. We knew this time we should rally. We've had a heck of a rally here. It was a bit of a hard rally. We're up or down, but the markets are never easy. We talked about buying the Dow Jones Industrial Average in the first trading day in November. There had been 12 wins, 1 loss in the last 13 election years. And there's the first trading day in November right there in StockCharts.com. Buy there. Well, look where you are now. So now we have 13 out of 14 winners. That trade again, if you missed it, you're going to buy on the first trading day of November in off-year elections. And pretty good in on-year elections as well, the big election every 4 years. But typically, right after the elections, as we talked about, prices rally. So there are little subtle nuances like this in the marketplace that you can pay attention to. They're there and they're real. So to take advantage of those, you just study the markets. A lot of people talk about this stuff as well. You can learn from them. But clearly, the market does have repetitive behavior in it. That's what I think. So as I see it, what you want to do now, you want to be long stocks, long bonds, and short inflation. If there was any broad brush thing I could talk about here, that would be it. That the best thing is to work the stock market from the long side. Bonds have had a huge up move here, a bit of a pullback the last few days. I'd like to be a buyer in the formation of a higher short-term low. And inflation, I definitely want to take sell signals in RINF, the inflation index I showed you, because it looks like inflation started to abate. Not just on my cycle work, but if we look at that underlying inflation index from the New York Federal Reserve, boy, that's really a pretty powerful index. And it certainly looks like inflation has peaked there as well. So we have a combination of ingredients. And I think that's the best way to become a trader. If we look at all these things together, then we start to see that, oh yeah, that's how markets work. They get a couple things going, like a combination lock. Click one number, click another number, click, and the lock opens up. I think that's what's going on here. And these particular examples, like long stocks, that give you a lot of examples of stocks that look like right now they're ready to rally. We talked about bonds, we've talked about inflation. So that's going to do it. Remember the 2023 stock and forecast report. Go to ireallytrade.com, sign up there when it's ready. And thank you, everybody, not only for being with me today, but for the comments you posted on YouTube during the year. I hope it's been a good year for you, that you've enjoyed the presentations. And definitely thank StockCharts.com, because without them, we wouldn't have had any of this. And so if you're interested in subscribing to their service as well, do it. It's a phenomenal service. So much good indicators there, a lot of presentations as well as, of course, a great charting service. So that's going to wrap it up for this year. Maybe I'll be back in 2023. We'll see what happens. But I want to wish all of you, as always, nothing but good luck and good trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.